Hey everyone, so today I'm going to quickly see if I can go through my order blocks type of method that I've been using for the last 6 months or so. Um, I use it, in combination with some of my other methods. This I'll just be trying to do a quick, let's see, a 5 minute video, 10 minute video of what to look for, what order blocks are, what breaker order blocks are, SFPs, and fibs, and how I use the fibs to tell me basically my orders and stop loss. So just to get started, basically we have to know what an order block is. And some of these methods and concepts were from other types of training that I used, which have been passed down, and the owner of this order blocks method and all that, might be lost in translation somewhere, and there's lots of controversy and that type of stuff. But this is my type of method, my take on it, and this is how I do it. So what an order block is basically whenever there's a swing high and a swing low, there's usually some movement right before. Usually these things are called springs. And what springs are is basically one last liquidity grab before a major move. So I have my chart here, and I use white and red because on a black background just to make things pop more. And so yeah, let's get started. So an order block, I'm just going to mark it with a rectangle box. This is on the daily chart on ETH, and I'm just going to pick some random ones and we'll see how they go. So one major, what you want to look for is basically a candle that sticks out to you. So right now I can kind of see this candle right here is the last move up before the major, haul down kind of thing. There's also the last move up and down from here, the last move up and then down here. But I'm just going to pick one randomly in the middle here and show you how it goes. So we take the box, we take it from the bottom of that candle and put it to the top of the candle, like so. And that is basically an order block right there. And this is on a daily chart, I just have 24 hours. So what this means to me is if price comes back to there, it's going to reject. And depending on how it rejects, it'll tell me if it's going to go through it or not. So in this example, we come down, we kind of stop here, which kind of makes sense, and then we have one swing up, and then everything from that is just death, right? So I'm going to use this. I move this, and I take this box, and let's just say this isn't over there yet. I know this is kind of foreshadowing a bit, but when we come back up, we see how we react in this area, and then we'll see how we react in this area, and from that, I can tell you if it's going to break through or not. So when it comes into here first, and let's say your shorts are in here, you can see it comes in and rejects. And it takes it out and it goes back down. Now that you see it's coming back up and it's kind of fizzing through it, I know that this order block is no longer going to hold. Just like that, right? Now, just because it went through it doesn't mean that it's not valid anymore. It just means that you shouldn't be shorting this if it's sifting into your order block. What you want to see into your order blocks is a big hit in and a big candle out. And if this kept going down, I would have been holding my shorts. And since it came down and started coming back up, I would have closed them around here. Of course, you could take profit down here. Now, with order blocks, you're also facing the other side of the order block. Where's the longs that this goes to? And if you want to look, your longs are basically, you're going up, and up means white candles. You want to look for your down candles before the up move. So let's just draw one on here. And when you get to ones that are really thin, like this, right, you can try and do a very tight order, entry here. This isn't really one that I would long for. It's more where I would short to is the candle body on this. This is on the daily, so I'm going to use, whenever you're on the daily, that's when you basically want to use the bodies if possible. So you use the body of this one, you short on this, and it comes down and you take profit here, and then your next target would be down here if it came that far. So you'd hit first take profit, you'd move to break even, and then since it's coming up and sifting in here, I would close that break even. You made the profit here, and then look for the next trade. So then you take the next move up before the big move down. So this right here, and this is where you kind of get into what I call hidden order blocks. And hidden order blocks are when you combine a few candles in a row. So we'll take the body of this first white one, which is the start of the move up, and we'll go up to 3 like that, right? So right here you have 3 dailies that go up before it starts tapering off and heading down, right? So this is where my next set of shorts would be if I'm, continually shorting this. If I somehow flip long, which I wouldn't have on this trade, my first target would be here. So this is basically what an order block is, and order blocks usually retest before they continue on. So here we'll combine this body of this one and this right here, and you can see people would have had shorts in this zone, and it comes in and then it goes out, comes back in, and it's gone, right? Gone from there. The difference between this one is it came in, retouched, and went out, and didn't come back in and sift in, came in, hit it, and went back out again. If it starts sifting into it, you see wicks and stuff, it's trying to get through it, that's when you know it's going to not hold, and that's when you get out of your short. Let's just continue this on. We'll cancel this. And my chart's now here. So right there I showed you how an order block with a body works right here. An order block with a body here. An order block combining, 2 here and 2 here and some right here, right? So the next thing to look for, and you can draw these on your charts and see how they go. The next thing to look for are breakers. And breakers are when price totally ignores an order block. So I'm just going to look for one right here. The recent one that we had is what I consider a breaker. So on the daily chart, we'll take the body of this and go up to the body of the top, right? So a breaker is when you place one of these, and this is a long kind of breaker. So if price were to go up and come back, it should technically, okay, we'll go like this. I'll slow it down. So this isn't an order block yet. You draw the order block on the next candle, or the next 2 candles. There we go. So it's the last red candle, this is going up, last red candle before the swing up, right? So you draw this order block. So that means price should come back, wick it, and go, right? And that means that you're continually going up. If we were to follow that somewhere around, ETH has not gone up for a long time, so it's hard to find. Okay, so this one right here is kind of one I can see. So this right here, we'll take these 2 moves down before the move up. This is what you want to see. You want to see it go up and come back and take off. If it doesn't and blows right through, like how it does in the next candle, just like this. This is called, when an order block gets totally ignored, it's called a breaker order block, which means the market structure has changed and we should be heading down, but expect a retouch in this zone. And this is why I'm currently kind of shorting this zone, is because I consider it a break in market structure and we should have retouches, and if we sift into it, then I would close my shorts and it would continue going up, right? So looking at this and we're looking at the current price, right now it just wicked up in the last day, which means my shorts, if I was doing this on Coinbase, which if Coinbase could allow shorts, that'd be awesome, but it, and I don't trade on Coinbase or Coinbase Pro or any of that. So if I look on here, this to me means we got the wick we wanted and it should continue down. Another thing is if it continues to sift up, then I would close the shorts. If I was in a short right now with all my short orders filled, I'd be looking at where the next OB is, which the next type of move would be this down move before the up. So my target would be down here for my shorts. This would be first take profit. If this wicks, you'd leave some orders here. If it wicks, you move this to break even, you took some profit, and then you continue on your trade. So that's what an order, a breaker order block is when it gets totally ignored and it gets retouched. Looking at this one, this is the last red candle up before the move down, got totally ignored on this one. It continued down, came back up for the retouch, and then took off, right? That's how that works. You start seeing them everywhere. This is an order block that you can see. On dailies, it's basically just use the candle. You can see this, and then it should continue up if it wicks into here and comes out. This one never got, or wait, did it? Yes, it did. So this one never got touched before. We'll just mark it like here. Look at how it came into here and took off, right? So this to me means that we're bullish kind of thing. Since it wicked in here and took off. This to me means we're bullish. We wicked in here and took off. This to me means bearish. We broke, that's that breaker type. We came down, broke it, retouched, and took off. It's the same type of thing both ways. That's basically how you do it. How you do order blocks is you look at the last, and it's really easy on a 24-hour chart. You can see them on any type of charts in here. They're just smaller movements, right? So if we look in here for some, you'd be combining, these two, and this is one where you get stopped out, right? It came through, it stopped you out, came back and continued on. This is where you can zoom in and see my previous one that got in. This one right here, you can see this order block, just like this. We'll just draw it over. So you can see how it came in. And the thing is, some people say, well, do you use the wicks or the bodies? When you get down to like 4 hour, 1 hour, 15 minutes, I use the wicks included, and you'll see why. It's because there's going to be slippage in these tiny time frames. You see I fixed this order block, and now it looks good, right? This to me is bullish, which of course it went up. And then when you're in these smaller time frames, you're not going to see a nice wick usually like this. You're going to see some of this rounding or price like that as well. So on daily, I suggest using the bodies only. On 4 hour, 1 hour, I suggest only using the wicks, because then you're gonna catch all the slippage that people have in those time frames, as well as alts, especially ones that aren't as liquid as Ethereum and Bitcoin. Alts are gonna have really nasty wicks that you really need to count for. So yeah, that's basically order blocks in a nutshell. I combine this with other types of methods that I use, my ATR and Guppy type thing. This is basically just another kind of form. And with this, it also, people draw those triangles and stuff, right? And technically those triangles come from these types of order blocks and price action. Because, you'll have stuff like here where this turns into a triangle, right? We'll start this as a triangle. We'll use the wicks because we're friends like that. This triangle comes a bit closer, and we'll do one more from here. Something like this as a triangle, right? If you see how the triangles form, and this is why I'm trying to not use trend lines and triangles in my latest type of stuff, you want to look for these order blocks. Look for this tiny wick that stands out by itself, right? You're looking for these tiny little things that stand out, and it's a breaker, right? This is on a 4 hour, it's a breaker, and it goes through, no reaction. It's got to come back and retest it. That's the theory behind this order blocks method. If a breaker goes through, it's coming back. That's how it works. That's just how that works. But yeah, if you combine everything and you see this, these, once you get used to them, just draw them on your chart. They stick out to me right away. Something like this where you have 3 down, and this includes wicks because we're on 4 hour. It should come back and test a support and take off, and you can see it's done it twice. And then basically, that's how it works. If you retouch, the more you retouch in an order block, the less it's going to hold. It's just like any support and resistance. It's the same type of concept, support and resistance. So that's basically how it works. And if you draw them, they just stick out to you, right? So you can see how wicks and stuff go through. And that's where I'm going to come to my next point, which are called SFPs. And swing failure pattern is an SFP, that's what it stands for, is when there's 2 different types. There's an SFP is basically when there is a level that's supposed to hold, you wick past it, and you come back. That's what an SFP is. Let me see if I can find some quickly here. Yeah, this is a really thin one. So whenever you have a swing high point, you draw a line from the close. So these are closed candles right here, right? You draw a horizontal line, right? You hold shift and you can make it horizontal. You just draw it out. And then what you're looking for is for a move past that close and then close below it. So a swing failure pattern, the first method, which is the way that I use them, is I look at the top of the close of the candles, and this works on bottoms too, and I draw the line, and if there's a candle that goes above this close, then closes below, just like this one did, wicked above and closed below, that to me is called a swing failure pattern, or an SFP, and I label that on my chart as an SFP as a reminder that that happened. Now, because it happens, what an SFP means is between a swing high in this instance and the SFP, there's going to be a low somewhere, right? There's going to be this huge low right here, right? Now, it normally means that you're going to re-reach this low, is what an SFP means to me. Some people, they use the top of the candles, and then they might not say this is an SFP because you didn't touch the top of the candle. I use it this way, where I use the close of the body, because a wick could mean, to me, a wick could mean liquidity issues, it could mean FOMO, it could be anything, right? It's when the candle closes, that's where the most price action is. So I use this, count as an SFP. This is my swing low, which means technically we should be targeting this low. You can target any of these swing lows in between as your target. So like right here, you can see this one. And how this kind of ties into order blocks is that's kind of, your order blocks is where your orders basically are. Swing failure patterns, when they show up, tells you basically which way the market should be going, technically. So let me see if I can quickly find some here while I'm with you. Let's go back to a daily chart. So you can see here, I'm just going to use this one as an example of why these aren't SFPs. This wicked below, right? It wicked way down here, but it closed up here. These are closing below, so these aren't SFPs. These are all basically closed candles going back and forth. This is more of a range. And then we'll continue here. This right here would be an SFP. So this candle comes down. We'll zoom in right here. This is your swing low, basically, one of the swing lows. Draw the line. Here's the SFP. The SFP, you put it on your chart, and that technically means we should be hitting the highest point in between. This is an SFP coming from the bottom rather than the top. This means from here, if this closes like it did, you should be aiming for this one right here, for this high. Now this high also turns out to be an SFP on its side multiple times, 1, 2, 3 times, never closed above this close. So this to me means that we should be aiming back for this low in between the top of the candle and the SFPs that are here. We should be aiming for this. As you can see, it aimed for a lot more than that. And that's basically how you do SFPs. So yeah, you just keep looking for swing highs, swing lows, and you look for the wicks, right? If you can't find a breaker in here, so like there wasn't anything really obvious in here as a breaker, yeah, there's nothing here obvious as a breaker, then you take your order blocks and you do these. This is a 4-hour, or no, this is a daily. So then you do these, and these are basically where the shorts are lying. And it's, it's right out of price action. You could do the wicks, and that would include these. But I mean, it's up to you how you want to do order blocks. On smaller time frames, I do wicks included. Sometimes I do them on alts, but on the dailies, I usually just use the bodies. That's basically how you do order blocks, breakers, SFPs. Find them on your own chart, that kind of thing. The next thing I wanted to quickly talk about was how I use my fibs to place orders. So people have seen these before on some of my charts. I'll do them in both ways. So what these are is I wrap the order blocks with these fib lines. And here's I'll show you my settings in here. Actually, I can just double click one of these. Show you one of my settings in here. So, people use fib lines or fib retracements to show them, the measured move of a move. The way that I use them, and I save them as a template, is called an order block with a stop loss. And these are my settings, is I have 0, 0.5, 1, and 1.6. So I use these to wrap an order block, and it gives me my stop loss. Now, I'll show you quickly an example here. We'll mark this one here. This is how I mark my orders. So if you see, if I draw out all my order blocks as green boxes, and then if I'm placing orders, I stick one of these on it to show me the values that I need. So from here to here is my shorts, and then it also prints out the prices at these targets. So the bottom of the order block, the middle, and the high, and then where this 1.6 comes into play is I back tested the next measured move and how many times it got stop lossed and how many times it didn't. 1.5, sometimes you get some crazy wicks that would wick you out on 1.5. 1.6 I found was the best. 1.7, usually if you hit 1.7, you're gone and your stop loss was going to be hit anyway, right? So that's the reason I use 1.6. And it's basically like from here to here and here, right? 0.5 is the middle of 1, and 1.6 is just 60, basically 60% more, and then that's your stop loss. 60% of this measure move is how that works. So that's why they're on my chart, is because as I draw them on order blocks, my orders and my stop loss automatically fluctuate, allowing me more space, because these are all percentage based. So if I have really tight orders, my stop loss is going to be tight. It's still going to be 1.6 out of the way. If I have bigger ones, then it, you can move them around, and yeah, it's basically my measured stop loss. So if I have orders really spread out because I'm expecting a huge wick, that also means my stop loss is further. So that's how you basically draw them, is you draw them over top of your order blocks, and that's why you'll see them on my greens and stuff right here. So in this latest one, and the way that you click them is how you want to use them. So if I'm looking for a short, I want to click at the top of an order block and move down. And if I'm looking for a long, you want to start at the bottom and move up. That's how that works. So in this situation, this is my breaker right here that we just talked about. If I include the wicks or not include the wicks, so let's just not include the wicks right now. I'll draw it like this. It doesn't have to be too perfect, right? Like exactly on here. You can get perfect if you want. You can zoom in and you can see here, just like this, we'll just line it up, because, it matters where both of these sides are. So you can see here, we maybe got 1, 2, almost maybe 3 into the order. If we went further, I would have been stopped out, which is fine. It's all position sizing, right? But yeah, if I got stopped out, to me, that means that the market structure broke again, and now we're going back up. So from here with shorts, I'd be targeting this order block as my first take profit. And if you want to draw your short position and stuff from here, you take this, you go to the stop loss. You take this, you go to the. I usually, if you're feeling scared, go to the top of the order block, and this will tell you, if you have 3 orders and they're equal, this is your average entry, right? You can weight these as well. You can have 50, 100, 200, whatever you want to do for weighting. It's up to you. It's all your position sizing, which isn't part of this video. So in this case, your risk to reward is 3.77. Your stop loss is this far away. You'd position size based on these numbers, and that's how you do order blocks with breakers, with my fib levels, SFPs in the mix, somewhere. I don't see any SFPs off this. We're looking for this and an SFP off this, in my opinion. So this would be my second, take profit would be down here type of thing. And sometimes, you'll draw these and then you'll get lost of like, why is this one, 1? And that's also why you might want to label, an order block so you know what it is. So this is a 4-hour OB. And that's why I label them as well. That's why I label my order blocks a bit as well sometimes. I'm just showing you on basically my test account of TradingView. It's a different layout. But yeah, you can see how we missed that on a daily. Right? You don't see the order block here on a daily, but you see it on the 4-hour. So that's why you label and you're like, why the heck did I put this box here? And it's because you put it on the 4-hour. So yeah, that's it. Order blocks in a nutshell. I don't know how quick I am. No, seriously, 25 minutes. yeah, if you have any questions, let me know. You know where to find me, or if you don't, you better try and find me, because some of this is pretty good info, I think. And that's that. Wait, have fun. Take care.